So the as far as taper relief is concerned, so let's see the rule of taper relief that will be provided you in the question. That if a person died after 3 years but less than 4 years, then a taper relief is 20%. And if he died between 4 to 5 years, then taper relief is 40%. Between 5 to 6 years, taper relief is 60%. And if it is in between 6 to 7 years, then it is 80%. So that means there is no taper relief from year 1 till 3. So if a person died after making a gift within 3 years, so that means there is no taper relief. And if he died after 7 years, that means the thing is exempt. So from the above example, we can conclude that it is in between the date of transfer of gift is 15th May 14, and the death is you can say that 30th September 18. So if we count it on, then it's 15, 16, 17, and it's 18. So it's from May 14 till April 15, 1 year, and then 16 second year, then 17 third year, and then April 13 is fourth year. So this is between 4 and 5 years. So we can say that the taper relief is 40%. So we have 40% taper relief, and that becomes 36280 into zero point 0.4. So reduction is 14512, and the remaining amount, that is 36280 minus 14512, it becomes 21768. And then deduct IHT already paid. Let's see what is the IHT already paid on this gift during lifetime. So for that we have to see the working of this one. So IHT paid is 33,500. So IHT paid is 33,500, and it is greater than this one, so that means there is no tax further payable, as it is more than that what I have to pay, and I have already paid the more than amount. Now, let's move to the second gift, that is on 15 September 17. So from 15 September 17 on death. So the death is within 1 year. So that means the gift is taxable as it is within 7 years of transfer. Now, so we can take gross chargeable amount. So from the gift, that is gross chargeable amount from 15 September, the gross chargeable amount was 4,44,000. So that is 4,44,000 is the gross chargeable amount. And from this, we have to deduct net nil rate band. So the nil rate band is 3,25,000 on the in the year of death, and you have to consider gross chargeable amount. So gross chargeable amount is now from the date of gift. You have to look back. So from the date of gift, when you look back, so we have another gift and having a gross chargeable amount of 417,500. So it's 417,500. So that means NRB is used up. So the whole amount is taxable, and we have IHT, that is 40%. So 4,44,000, it will attract an IHT of 40%, and that becomes 177,600. And there is no taper relief. You can say there is no taper relief. So taper relief is nil minus IHT already paid on this gift. So let's see the previous calculation. So the previous calculation was IHT paid was 88,800. So 88,800 is the IHT paid. So now let's work out. Our total liability is 177,600. IHT paid already is 88,800. So 177,600 minus IHT already paid. So that becomes exactly the half, 88,800. So this is IHT payable on death. On a second gift, the liability is 88,800, and this has to be paid by the person or the trust that has received the gift. The donee is responsible for the payment of gift. Now let's move to the potentially exempt transfer. As we know that a potentially exempt transfer is exempt at the time of transfer, at the time of gift, but if donor dies within 7 years of transfer, then it's become taxable. And if donor dies after 7 years of transfer, then this is now completely exempt. And for that we have to work out, and there is a taper relief as well, and tax rate is same, and that will be provided in the tax sheet, 40%. And on death you have to get an RB as well. So let's solve an example covering the potentially exempt transfer. For example, Mr. A made or transfer following gift during his lifetime. On 15th of August 2012, or rather make it 2011, a CLT, that is a gift given to a trust worth 4 lakh, and tax is to be paid by trust. Now after that, on 15th of August 2014, there is a PET, a gift made to his son, and the value was 4,50,000, and that person was died on 14th July 2018. Calculate IHT on death. Now if we look the dates, so our first gift is CLT, and the date of the gift is 15th August 2011. So on 15th August 2011, that in the year 1112 we have to pay tax on CLT. Now compare this date, 15th, compare this date 15th August 2011, and compare with the death, that is 14th July 2018. So that means that the exact there are 7 years. So that means within 7 years, or this 7-year rule is applicable. So we have to check the IHT on CLT as well, CLT during the lifetime and CLT on death. Similarly, on 15th August 2014, there is a PET, and so PET is exempt. Now, as far as the death is concerned, the death is 14th July 2018. So that means PET is also taxable on death. So let's work out the tax on PAT on death. But for that, we have to work out the CLT value. Uh, First, let's identify CLT. So the value of transfer is 400,000. CLT, transfer of value is 400,000 pounds. Let's deduct the annual exemption of 6,000, 3,000 each, 6,000, and that is 9 lakh, 3 lakh 94,000. And this is gross chargeable amount, as trust has to pay tax. Now we have to deduct nil rate band, assuming the nil rate band of that year is, let's assume it's 300,000. I haven't given you in the question, so let's use the assumption, and this is the taxable amount. Now on this taxable amount, I have to report IHT at the rate of 20%. So now why IHT is 20%? Because the trust has to pay tax. So in this way, we have 20% rate, that is 18,800 IHT. And the gross chargeable amount is 3,94,000. So this is to be used for the 7-year accumulation rule. Now, as far as PAT is concerned, so in the year when PAT is made, there is a transfer of value, and that transfer of value in the case of PAT was 4,50,000. Now, find out the annual exemption, and that annual exemption is 6,000. Although PAT is not taxable at the time of transfer, but still we have to calculate the gross chargeable amount. This is gross chargeable amount that is to be used for the calculation on death. Now, let's work it out. On death, we have gross chargeable amount of PAT, and that is 4,44,000. Now from this value, we have to deduct NRB at the time of death. So let's assume that NRB at the time of death is 3,25,000. So look back 7 years rule says that check it out that from the date of the gift, is there any uh, previous gift within the 7 years accumulation rule? There is a CLT, and the CLT chargeable amount is 3,94,000. So that means gross chargeable amount is 3,94,000. And as it is greater than this, so NRB is used up and the whole value is taxable, 4,44,000. So this is the taxable amount, and on which we have to pay IHT of 40%. So 4,44,000 and IHT of 40%, that is 1,77,600. Now there is a rule of taper relief, but that person died within, let's see, from 15th August 14 till 14 July 2018. The period becomes 15, 16, 17, and 18. So exactly 4 years is there. So 3 to 4 is the time. So you can say that taper relief is available. A bit taper relief of 20% is available. Taper relief is available as it's 3 to 4. So 20% taper relief is available. So we have to deduct 600 into 0.2. So that means 35,520 is deductible, and the value is, the remaining value is 1,42,080. So this is the IHT payable, because in the case of PAT there is no amount that is to be deductible at the time of gift. So this is the final tax liability, and it is to be paid to by the donee, and in this case the donee is the person to whom the gift has been made. It is his liability to pay IHT on the gifted amount.